know those people who are always walking around predicting the end of the world?
I know what happened. You guys dropped acid, didn't you?
They're convinced the world will end tomorrow. Then it doesn't happen tomorrow, obviously. And then they come back and say, no, it's definitely gonna end tomorrow. Well, that's what the media is doing with the Australian housing market. We're supposedly on the brink of an apocalypse because people were lying on their loan applications. We showed why that claim was absolutely nonsense previously. Now they're back again with another outrageous claim. This time, they're claiming home buyers are living in mortgage hell. Maybe as a punishment for supposedly lying on their loans? Some have even started claiming that affluent suburbs are on the brink of collapse because of this. In this video, we're going to tell you what mortgage stress is, why the media claim that households are under mortgage stress is absolutely nonsense, and how you can avoid mortgage stress. Before we start this video, if you find it helpful in any way, do me a little favor and hit that like button below or leave a comment for the YouTube algorithm. Just a little gesture like that makes a huge difference to the channel, and if you haven't already, hit that subscribe button below. Thanks you guys, it really means a lot, so let's dive in. What is mortgage stress? Different lenders define mortgage stress differently, but it's generally defined as spending more than 30% of your income before tax on your home loan repayments. Let's say you earn $12,000 a month before tax. If you spend more than $3,600 on mortgage repayments, then you're considered under mortgage stress. Some lenders evaluate mortgage stress by looking at how much money you have after all your living expenses. If you're left with less than 5% of your income after expenses, you're considered stressed. So, if out of $12,000, you're left with less than $600 after all expenses, including housing, food, transport, entertainment, then you'll be considered stressed. So are many Australians under mortgage stress, as the media is reporting? According to research by the University of New South Wales, 42% of households are in mortgage stress, with the most effective areas being affluent suburbs. Why is this absolute nonsense? Firstly, the 50,000 people in the research done by the University of New South Wales included people who are paying rent and those who are paying mortgages. That's like comparing apples and oranges. People paying rent cannot experience mortgage stress because, well, they're not paying a mortgage. Secondly, the media is claiming that the low interest rates are exciting households to borrow more than they can actually afford, putting them under stress and increasing their likelihood of defaulting if interest rates increase in the future. This is simply not true because according to APRA, homeowners are saving about $13 billion in interest costs each year because they managed to increase their offset balances to $205 billion in the first 3 months of 2021. And these savings are set to hit a $230 billion record soon. This will provide a great buffer for when interest rates do rise. Another claim is that households are under mortgage stress because incomes are under pressure due to COVID-19. But according to a new analysis by the Commonwealth Bank of Australia, incomes have surged very quickly in New South Wales and Victoria in recent weeks because government support payments are starting to hit savings accounts. In addition, the number of people defaulting on their mortgage is actually lower than it was before the pandemic. So instead of burning in mortgage stress hell, as the media would have you believe, most homeowners are actually in property paradise. However, even though the media is sensationalizing and exaggerating the figures, mortgage stress is a real thing, and sometimes it happens to first home buyers. Here are a few things to avoid it. 1. Pay down as much as you can, even while rates are low. Even though your mortgage may be over 30 years, calculate repayments based on a 20 to 25 year and start paying as much as you can ahead. 2. Consider splitting the loan. This includes having part of your loan balance charged at a variable rate and part of your loan at a fixed rate. It means you'll have more flexibility with an offset account on the variable loan and ability to make extra repayments on that, whilst you can get the stability in repayment with your fixed loan. 3. Maintain a repayment buffer. A mortgage buffer is an extra repayment that you pay in addition on top of your monthly repayment, and it's usually tied up to your home loan. A mortgage buffer will help reduce mortgage stress in the event there's a sudden change like loss of income, sickness, accident, or if interest rates rise. Make sure your buffer can absorb a rate rise of 1 to 2%. 4. Try not to overstretch yourself, no matter how tempting it might be. When budgeting to buy a property, set your walkaway price, and if that price is more than your walkaway price, simply walk away, no matter how great the property is. 5. Work your way up the property ladder. If you can't afford a house in the preferred suburb, consider an apartment or another suburb and start to work towards being able to afford a house in the suburb you want. If you can't afford a big house, start with a small one. Remember, your first home is not always going to be your forever home. What's important is to get into the market. 6. Think about relocating out of expensive cities. Just getting 2 hours out of a popular location can enable you to find a house that's more affordable without losing the convenience of being close to the city. Good roads and rail links make it possible for you to work easily. And also, the increased popularity of working from home means you might not even have to do the commute. 7, consider rent vesting. Rent vesting is where you rent where you live and buy an investment property where you can afford. It allows you to live your preferred lifestyle without getting into mortgage stress. 8, cut back on expenses and debts. Ask yourself if you really need to be paying for 5 streaming services. What about that gym membership that you never use? Is this the right time to be buying that new car? Do you have to go to that restaurant every weekend, or can you reduce it to every fortnight? Cutting back on expenses will help you prevent mortgage stress. 9, don't rely on the bank to tell you how much you can afford. Work out how much you're comfortable with repaying. Just because the bank says your maximum borrowing power is $1 million doesn't mean you should borrow $1 million. Most banks have a calculator which shows you how much you can comfortably borrow in different scenarios, such as starting a family or rate increases. 10. Look for cheap mortgages. Lenders are always fighting each other for new business. So if you have a good repayment history and have built equity in your property, you might be able to find a lender with a more competitive offering. Also, consider linking an offset account to the mortgage to help reduce interest paid. Money in the account can be used to offset the balance on the loan, reducing the amount of interest charged each month. So don't pay attention to the overdramatic media that wants you to think that if you get a home loan now, that you're going to be in mortgage stress. Being a homeowner will actually make you more financially stable as long as you do it with an experienced mortgage broker. Here at Hunter Galloway, we help you get the loan that's right for you and your circumstance. Visit us online at huntergalloway.com.au or call us on 1300 088 065 and we'll see you next time.